Is the private credit industry a fraudulent bubble? A $3 billion hedge fund, Rubric Capital, is claiming just that in a new letter to investors. The former Point72 manager David Rosen suggests some bad actors are playing Enron-like accounting games, pointing to recent distribution cuts as the latest red flag. So what exactly does he think is happening? Well, he suggests that some business development companies are shifting borrowings using short-term repo loans to essentially get this debt off their balance sheet before they file, then return that debt to their balance sheet after the end of the quarter. He specifically calls out Cliffwater, the biggest operator of interval funds and an aggressive proponent of selling private credit investments to individual investors. Now, you're probably asking, why does private credit even matter? Well, the BDC industry oversees $300 billion in assets and accounts for 25% of the direct lending in the US. However, it's recently experienced significant stress due to heavy lending in the software sector. AI is pressuring those companies' businesses and making it harder for them to reach profitability and repay their debts. The main problem is BDCs are fighting a war on multiple fronts. They not only have to worry about the companies that they're lending to, but investor confidence in those companies. If investors lose confidence, quarterly redemption requests could force them to sell some of those holdings at a discount to market value. And if enough firms experience this at once, a crisis of confidence could quickly become a cash grab driven crash. Now, we are very far from that happening, but fears of it have already sent stocks of Blue Owl Capital, KKR, Apollo, Blackstone, and others plunging. It's also worth noting that Rubric Capital is not the only fund manager flagging risks in private credit. Whether this is a systematic risk remains up for debate, but history does tell us that high leverage in building an industry, at least in part on short-term capital, can lead to some pretty unsavory outcomes. As always in markets, we'll have to wait and see how this plays out, but let us know what you think of private credit in the comments down below, and follow Stocktwits for more industry updates like this.